Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
With a stop of 22.50, target of 21.30.
Okay, well, that's just a few more seconds, and there goes the bell. Okay, the first trade is very, very mute, 0.25% higher. The Nifty Bank is just moving into the green. I mean, let me look at the green stocks first. L&T, a thumbs up, no doubt about that. 3% higher. HCL Tech, SBI, HDFC, M&M, Bajaj Auto are the other stocks that are doing well. So it looks like that rural focus is there. M&M, Bajaj Auto are the ones that are leading. Tata Steel also doing well. Of course, we have to. Yesterday it was an extra rights issue. So today, back to normal on Tata Steel. NTPC getting punished. Revenues were lower than what the street expected. Sun Pharma is sulking a bit. Infosys, Dr. Reddy's. So, okay, you're not looking at the global stocks today. You're looking at more the economy stocks. Speaking of rural, I don't see too much of a move in HUL. And ICICI Bank is flat at least. You're not seeing red on the screen. But to be fair, it discounted a fair bit of good news. Mid-caps are in the red. Soumya.
Yes, they are. So they're underperforming the frontliners for sure. The mid-cap index is flat, but the market breadth is not bad, Lata. It's almost 800 stocks on the advancing side, and there are plenty of stocks. IFL Holdings is one stock that is in the news. IFL will be reorganizing its group into 3 separate entities. So IFL Holdings is up almost about 5% right now. We have a couple of stocks from the fertilizer space, Nagarjun Fertilizers. All your agri-focused stocks are doing well this morning. In terms of result reactions, you have JSW Steel in the green, Vedanta as well. To look at, both reported good numbers this time around. Quest Corp is another one that's in the news, so up almost about 2%. But for the market as a whole, Anuj, it seems to be a decent opening. Yes, mid-caps are largely in the red, but otherwise Nifty, it's status quo for now.
I tell you something, the trade of the morning is ICICI Bank because it opened lower and immediately there's a massive green bar which you're seeing on ICICI Bank. So obviously that disappointment has been bought into. It opened 2% lower, but immediately there's buying and clearly the numbers are better than the market estimated. So that's why you've seen that immediate buying in ICICI Bank, and that's propelled the Bank Nifty right now. 77 points higher, 88 points higher is what we have on Bank Nifty. But Ashwani, what would be your first trade right now?
See, since yesterday something is going on with these private banks, so I think Bank Nifty can be bought even now, and possibly you could have some more upside till the budget. I think Reliance has opened very well, gapped up above yesterday's high. MCX has opened extremely well. Yes Bank has opened well. So there are private banks and possibly Reliance which are doing well. So those are the stocks you can look at.
Yeah, and there was this rumor going around that the policy could, budget could have a policy saying that FDI 100% can come into banks. Yeah, so actually, there was that rumor going around.
Yeah, that 100% FDI in bank is something which is also being discussed. That could be a possibility. But Ashwani, on ICICI Bank in particular, it's now, absorb all the selling of the opening take. Any trades here?
See, simple logic. If anything moves up on quote-unquote bad news, that means the news has been perceived well, and chances are ICICI Bank could move further and possibly get towards 365. But other banks are also moving strongly, so it's not just a result play. It is probably the private bank, FDI, etc., whatever is expected. That is probably taking the banks higher.
Okay, by the way, I just want to point out one stock, which is, of course, farm focus related. Escorts, they've just come out with their agri-machinery numbers as well for the month of January, and they're looking pretty good. 45% growth year on year is what we're seeing in agri-machinery at 5,300 units. And yesterday, the company came out with earnings as well. Naren, I want to pose this question to you. This government is very keen to create a perception that they're doing a lot for the farming community. Does that give a lot more lucrative opportunities in the agri-related sectors, whether it's tractors, fertilizers, etc.?
Clearly, I think the government and all of us should actually believe that we have to somehow get rural incomes higher. And getting rural incomes higher without food inflation is the biggest task for any government. And for that, if they make the inputs cheaper, which are not like a subsidy, I think that would be very, very positive. And we believe that it's very necessary to actually push the rural economy forward over the course of the next 3 to 5 years.
Actually,
and clearly companies like motorbikes, tractors and anything should help.
Okay, I'm very tempted to ask you, would you buy ICICI Bank at this price? but I will refrain, Naren. Let me just ask you, what would you
No, I
consider?
can't answer such questions.
No, I'm not asking you. It's the most interesting stock in the morning, that's all. Actually, I want to just ask you, what would you consider, a safe budget? If there was an LTCG announcement, do you think this budget will be able to, the markets will be able to brook that?
See, basically, no, we are currently discussing equity markets, but as you know, interest rates have gone up significantly in the last 6 months to 1 year. And somehow people are very, very focused only on the disinvestment target. But people don't realize that as the biggest borrower in the country of more than 50 lakh crores, if interest rates were to keep shooting up like this, it is neither good for the economy nor good for the corporate sector. My view is it's very important to incentivize debt investors at this point of time, and it is necessary to bring a fair amount of money into debt, because if you want a healthy economy, I believe you need lower interest rates and decent equity markets. It's not enough if you have just equity markets shooting up and interest rates also shooting up. So I would say for me, a budget, I would be very happy with this budget if we got the feeling that interest rates are not headed upward, and in fact if we got the feeling that interest rates are headed downward, I think that would be the best budget I'm looking for at this point.
Okay, I think just to take Sonia's point forward, clearly the stock of the morning now is Escorts, and obviously the market likes those numbers and the fact that there's a bit of a farm focus, so you will have all these tractor and agri-related stocks do well. So just pull out the intraday chart of the stock and see where it is right now, and making highs of the day. And again, a stock which has corrected in the past. Look at that move, 3% higher is what we have on Escorts at this point in time. Naren, final question then from my end. Do you think this year, especially in the broader market, it will be tough to make money, the kind of money that investors made last year? The index itself was up 48% last year, and this year we've already seen that bit of distribution in mid caps.
See, whatever I believe, this year is not the worry, because at the end of the day, normally earnings will come in this part of the cycle, and that tends to help equity investors a lot. So I believe that when your capacity utilization is going up, earnings is going up, and that is a very healthy environment from an equity market point of view. I think the real worry is not this year, but the real worry is that how to keep the momentum going for the next 3 to 5 years. And for that, we need, in my opinion, much lower interest rates, a much bigger capex cycle, a lot of jobs to be created, incomes going up both in rural areas and urban areas. I think that's a kind of environment which will help over the next 3 to 5 years. I believe from a cyclical perspective, this year is less worrying, although what I have seen from past bull markets, in this stage of the cycle, actually it's a narrower set of stocks which start to go up. If you look at the global markets, it has been FANG stocks and BAT stocks. Like that, it can move to an environment this year where it's only one narrow set of stocks which are going up. And if you're present in them, you'll be happy. Otherwise, you won't see the bull market. And that could be the kind of environment which prevails this year.
Okay, Naren, we'll have to let you go on that note. Thank you so much for joining us. By the way, the stock of the moment is L&T. It's up 3.5% right now, moving to the high point of trade, and it is the big nifty gainer. Manishi Ray Chaudhary of BNP Paribas also joins in, and we have a whole host of other experts joining in as well. Manishi, hi, good morning. Before I ask you about the budget itself, L&T is generally the barometer as far as economic revival is concerned, and after a really long time, we're seeing such a big pickup as far as order inflows go. Does this give you a hope that perhaps we're seeing a bit of a pickup as far as the capex cycle is concerned?
Well, as far as the capex cycle is concerned, the private sector capex cycle hasn't picked up yet. But I think if in general these investment cycle related stocks are doing well, it's an indication that the budget has hopes about the government trying to revive or at least putting more resources into the government-oriented projects. Now, that being said, we have already seen the road sector doing well. We have seen urban infrastructure doing well. So I guess, if the government has any hopes from the budget, it will have to be from the rural and semi-urban infrastructure standpoint. It could also be on, rural housing or semi-urban housing or low-cost housing. So, but in general, I think the market participants are possibly looking at the expenditure side of the budget this time around, and that is kind of getting reflected in the way these capex-orientated stocks are behaving.
Okay. Well, I'm just wondering if we can get one word from Sudarshan as well on whether he's looking at any of the stocks now, because technically as well, there's some very strong move coming in L&T and ICICI as well, beating down the early morning blues and now trading practically flat. Would want to know chart patterns in some of these agri stocks as well.
But
like
I just want to make a point. The mid-cap index is already in the red once again now. 71 points down on the mid-cap.
Was actually downbeat even in the first opening trade.
Yes. So the key here is, once again, there's a bit of a selling pressure distribution in the mid-caps, and that's been the major market trend. And this, of course, has something to do with that, LTCG part as well that we were talking about. So that would be the space to watch. If there's no sort of LTCG, this was the one which will spring up. So that's something to watch.
Actually, that question to you, Manishi, as a person who speaks to foreign investors all the time, will an LTCG imposing gains on anything that you sold after 1 year would be a bother?
Well, imposition of long-term capital gains would obviously depress sentiments on the Indian market at this point of time, because none of the other large markets do have long-term capital gains at this point.
No, Manishi.
Also, if you look at past 10 years or so,
it's quite possible it will be for domestic investors, and foreign investors will continue to be kept out. It's quite possible that the tax comes in that fashion.
if you look at the recent fund flows, it's basically the domestic investors who have participated more, right? In 2017, we had close to about $7 to $8 billion of flows from the foreign investors, while the domestic investors, particularly in the mutual fund, the flows were in double digits. So a relative penalizing of the domestic investors through an imposition of long-term capital gains only on them would also not be welcome at this point of time.
Okay.
I don't think the government would want to puncture the sentiment in the equity market at this point.
Okay. So, Manishi, good morning. The interesting point in that case is, do the mid-caps make a bit of a comeback if there's no LTCG, or do you think mid-caps have a bit of an inherent risk right now with the kind of move that we have seen?
Well, I don't know whether the the mid-cap correction that you're pointing out is related to the worries on long-term capital gains or not. Partly it could be because the mid-cap index had moved up way too fast. If you look at whole of 2017, particularly the second half, the mid-cap stocks had actually gone over to a very significant premium over the long-term indices. And I think what we're seeing now is a natural process of correction. Obviously, the stocks that are relatively small, that are relatively illiquid, and which are in a much earlier stage of their life cycle, it would be, perhaps premature to expect them to trade at a very high premium over the large cap stocks over an extended period of time. And we are seeing a natural process of correction at this point.
Okay, actually, Neelkant Mishra of Credit Suisse and Gautam Chowchari of UBS Securities have also joined us. Do stay on, Manishi. Neelkant, the one important question to you, you follow the GST numbers very closely. You know that the whole idea was that it should increase the tax to GDP ratio. Do you think next year for FY19, government will have enough money and that will be focused on farm policies?
On the revenue side, I think there are a few things that happen. The first is that we get 12 months of indirect taxes versus 11 months in FY18. So as you know, because of scheduling issues, and this has been well flagged, that the last month's revenue till 27th under, say, excise, sales tax and service tax used to come in the same fiscal year, but in GST it will fall into the next year. So we have effectively 11 months of indirect taxes this year. We'll have 12 next year. The second is that if you look at the split of, say, excise duty, what used to be, and which sectors drove that, the contribution from, so if you remove petrol, diesel, and the contribution from petrochemicals, like say naphtha or fuel oil and all that, and steel, in cement, plastics, chemicals, etc., is actually very high. And for most of these, we are seeing revenue growth in the high double digits, or rather say high teens at least. So we have a strong pickup in prices, we have decent volume growth, and so even if you assume this year's GST revenues are the base, whether good or bad, you should be building in a meaningful jump next year, partly because of more months and partly because there is inflation in some of these products. On the direct taxes side, I think the government also should expect a meaningful pickup. If Nifty EPS is going to be as high as what is being assumed, I think it'll see cuts, but even if it's 14-15%, you should see a meaningful improvement in corporate tax collections. Now, on the expenditure side, my problem is that I think the crop insurance scheme and the Pradhan Mantri Fasal Bima Yojana, I think the government is working on a revamp of that. There is scope to do more there, but that is more an income protection scheme. It is not an income growth scheme. I mean, so from a political perspective, while from a policy perspective, of course, it is imperative that we do it, but from a political perspective, given that farm income growth has been weakened by low farm prices, you need to have schemes which boost incomes. And for the life of me, I can't think of anything which can be that meaningful. It is not very easy to spend. Spending 20,000-30,000 crores is not going to make that big a difference. But at the same time, it is very hard to imagine how the government can spend, say, 60,000-70,000 crores more. So while there will be a lot of schemes, I think in terms of the absolute quantum, the numbers may disappoint.
Okay, get your point. The quality of spending is more important than the figure alone. But we also have Gautam Chhacharia who joins in now. Gautam, we just got comments that this is going to be a political budget, not an economic one. Are you worried about the quality of spending in the sense that there might be a bit more populism, given that 2019 is the year of elections? Is that a risk for the market?
Populism, if it's accompanied by high fiscal deficit expansion, then it would be a worry. Populism within the contours of fiscal deficit, like we have already been seeing last 2 years, we have seen big pickup in Narega spending. We have seen many farm loan waivers by various states, but they have all happened within the contours of fiscal deficit, and that's why they have not really worried the market. So as long as any social programs happens within the fiscal contours, I don't think the markets will necessarily get worried. But yeah, what would be interesting to watch out is which are the social schemes they're looking at, and therefore is there any sector implications worth following.
Anishi, a final question to you. You've looked at the earnings season so far. Yes, the budget will be important, but it can't do much about the earnings growth. From an earnings growth angle, what would you latch on to? The L&Ts of the world, which have shown very clear rebound?
I would think that, yes, the investment-related companies would possibly revive. Maybe not right now, but in the second half of this fiscal year. And before that, I would like to see a slight revival in the public sector banks and also in some of the consumer discretionary companies, which apart from the auto side had actually been disappointing. Now, there are some encouraging silver linings at this point of time. We have seen good commentary from some of the consumer staples companies that reported earlier. We have seen encouraging commentary from the media companies, which reported more than 30 to 35% growth in advertising revenues. And they talked about that growth being broad-based, being contributed by all sectors. So I think this quarter has started on a much more positive note than the previous 5 to 6 quarters. it seems that in the entire Asian pantheon, the sectors and countries which had not joined in the earnings estimate recovery party last year, they seem to be joining in a small way. So I think that's encouraging. So it could be that the worst of the earnings downgrades that we had seen in India are possibly behind us.
Okay, by the way, don't lose sight of the large caps. The market is making a bit of a move. Larsen and Toubro, of course, we've spoken about, but HDFC twins for last 2 or 3 days have clearly helped the bulls, and today also HDFC is making a move towards the high point. But Neelkant, from a market perspective, what would you watch out for in budget then?
I think the budget will be as much of a non-event as it has been in the prior years. It is. I think there is too much media attention and too much time is wasted double guessing what actually is just simple arithmetic. The two takeaways that I can see, which should be of some use to the markets, are that one, I think the bond yield spike, which because the spike has happened, and we can discuss why it has happened, but the point is that it has happened, people are ascribing meaningful fiscal slippage, and my God, the oil prices are going up and therefore the government will somehow go bankrupt or something. I think those concerns are clearly exaggerated. I think people are reading too much into what could be the political compulsions and how that will translate into policy. My sense is that the rise in the bond yields is somewhat unjustified. The second implication I can see, to the extent that those stocks have priced in or have really gone up because someone expects a big stimulus, that there's been this view that somehow rural income growth has been weak, and the government, because of political reasons, will support that through the budget. And given the limited capability of the government infrastructure to deliver something like that very quickly, I doubt that's going to happen. So those would be my two takeaways for the market.
Okay, well, Neelkant, we only asked you that question because Jayant Sinha just told us that it's going to be a political budget since it comes ahead of a whole bunch of elections. So that was why that question. In any case, Neelkant, thank you very much for joining us. Manishi, let me thank you as well. We'll keep Gautam for a bit. But meanwhile, in the background of this, Jayant Sinha giving us this huge political headline that this will be a political budget. Let's go to Shireen. She is joining us with some fresh leads from North Block. Do you have them, Shireen?
No fresh leads at all, Lata. It's pretty much what we've already been reporting on, and as Neelkant was pointing out, it is going to be a balancing act. It's meant to be an arithmetic exercise, but every year we talk about the possibilities of what the budget can in fact do and deliver on. I actually want to showcase our set, Lata, because we're very excited about this. This is going to be our budget headquarters for today. We're operating out of the Confederation of Indian Industries headquarters, the makeshift headquarters. But we've got a star lineup starting with the Economic Affairs Secretary. He will join us right after the budget speech, and he will take questions from our corporate panel. And then, of course, we've got all the top politicians joining us here as well. So I just wanted to say hello to everybody from our spanking new set here in the national capital. And, of course, you guys have the Commerce Minister lined up in just a few minutes from now.
Yes, in fact, we do, and we'll keep coming back to you for more as well, Shireen. For now, just wanted to get back to the markets because a couple of pockets are picking up. Just look at the NBFCs, Manappuram Finance, Edelweiss Financial, all up almost about 2 to 4%. Of course, Agri is the space to be in this morning. Escorts, Jain Irrigation, all up about 1 to 2%, and L&T has hit a new high. This is a market that seems to know what it wants to buy. A couple of pockets are looking good, Capex, Agri, etc., and a lot of buying action seen.
It's not looking like a market worried about long-term capital gains.
No, I see. The budget happens at 11 a.m., right? So
you can always offload.
As we discussed in the morning, this is right now the power play overs. You don't have field restriction. You have no restriction on you. You can go out and play your shots. The problem point would be from 11 a.m. After that, we will see if we can negotiate.
But is there a problem point, or is this market ready to digest? Even if there is a 10% LTCG, it will digest it and move on because of global cues.
No, I think the mid caps would have a problem if there's LTCG. Make no mistake about that. I think LTCG would change dynamics, and we don't even know how that would work. So best not to speculate. Let's see how things go. But for now, the market is focused on
Actually, why
equity.
don't we put that question to Gautam since he's there? Gautam, with regard to taxation, you know, as we've all been talking, the concern is if there is a change in the long-term capital gains regime, or even if there is a rejig in the definition of long-term capital gains and short-term gets extended to 2 or 3 years. How do you think that will impact sentiment?
Last year, when there was such discussions ahead of the budget, the markets got worried. This year, such discussions are not worrying the markets. So, how the government perceives it. There are two things here: government doing this as a philosophical tax issue, or doing it for getting more tax revenues. So I think that's where the answer is. If it's a philosophical thing, they could just give a roadmap instead of doing it now. And that will give enough time for the markets. Even extending the long-term capital gains period from 1 year to 2 years, unlikely to hurt market sentiment much. But if they actually impose a tax on long-term capital gains from 0 to some number, and that too immediately, that could definitely hurt, because that will hurt return expectations and returns which the investors have already made, including NAVs for some.
Okay, Gautam, thanks a lot for joining us, and thanks to other guests as well. Neelkant, thanks for stopping by.
Lots of stocks surging. We've been talking about Escorts. That clearly is your stock of the morning, but don't lose sight of M&M. That's trying to catch up with Escorts, and there's a big move now happening in M&M as well. Escorts, of course, has hit lifetime high, and M&M is trying to get there. But what should be your trades now? Ashwini Gujral, Sudarshan Sakhani, Mitesh Thakkar back with us. Ashwini, decent first hour so far. What would be your advice here, and what would be the stock calls now?
See, there's definitely something happening on private banks, maybe their expectations, etc. Having said that, Havels, after 2 days of slamming, that has turned around and is now moving on the upside. So maybe some short covering can happen there. Overall, the market is going, positive into the budget and expecting no negative. So the typical budget favorites like Housing Finance, CanFin Home, LIC, etc., they are moving higher. So it looks like financials are moving up, because maybe they expect some action on bond yield, etc. I don't know. But it's clear that financials of all kinds are moving up instead of just housing finance. Yeah. Having said that, for the moment, Escorts is still a buy with a stop of 838, target of 860. Larsen is a buy with a stop of 1450, target of 1500. And Vedanta is a sell with a stop of 336, target of 320.
Yep, that point is taken, that low expectation of a lower deficit would be positive for all financials. So, Darshan, we didn't get a chance to speak with you after the market opened. What's your morning trade? And stock-wise, my question would be on M&M. Is that a good bet?
Oh. Okay. No, the point I wanted to make to Ashwini was that, Ashwini, your target is already here on Escorts. It's been that kind of move on Escorts. But on Havels, which you said is fresh breakout, what would be the trade now?
Well, for starters, 550, 555 can happen on Havels, because again, something is getting priced in, and if it doesn't happen, everything that got bashed up because of this is likely to make a sharp move higher. In any case, BHEL, Havel, Larsen, it's that kind of day.
Yeah. Oh yes, IIFL I think is reacting to the fact that there will be a demerger of
yes, a reorganization of the structure. But two pockets that we spoke about. One is the tractor segment, and the other one is capex related, so infrastructure companies. Mitesh Thakkar also joins in. Mitesh, the stock that's following Escorts now is M&M, almost 2.5% higher. Would you trade any of these despite the rise that we've already seen?
Yeah, very much. I think M&M is also my recommendation right now. See, I think what has happened here is that the stock has managed to get past the earlier highs of 775, 778 zones, and clearly looking at a fresh breakout. So I would be positive. Keep a stop at about 765. Look for targets around 810. And the other one is a sell call. That's the SREI Infra, which I would want to sell if it starts breaking below support levels of 95. So it's a conditional sell. Sell then with a stop at 97.25. Look for targets of 90.
Okay, what about the trade on L&T? Trade on L&T, Ashwini?
See, L&T was a call, and I believe that the investment sector is likely to pick up because of this budget. So chances are ABB has done very well in the last few days, 1650 now. So the second phase of the bull market will be more in investment and construction type of stocks.
Okay, Ashwani, so since Escorts has already moved up 5.5%, do you think you could look at M&M as well? That's also now making a bit of a move.
M&M hasn't really set the street on fire. It moves and then it gives up those gains. I go with whatever has already moved because it can move up even further. Plus, I don't know if Eicher makes tractors, but that is also moving up for some reason.
That's true. Well, yes, series for sure.
Yes, not tractors.
Yeah, and final question to you, Mitesh. Jain Irrigation, I mean, that would be the arch farm-focused stock.
See, also I think it's an F&O band, but very clearly, the stock, if you look at the last few days of price movement, 145, 146 hasn't been taken out on the closing basis. So if it starts getting past 146, I think 155, 160 could happen very soon.
Okay, since we're looking for tractor makers, VST tillers and tractors is another stock. It has been, it has attained fancy of investors for a while, and today that stock is up almost about 3% or so. But thanks guys for joining us and giving us your views on individual stocks and on the market. By the way, some of these stocks like FACT have hit new highs today, so the fertilizer space is abuzz with activity. Maybe something coming there. FACT now up almost about 3% or so.
And you know what? I think while we've all been talking about Larsen and Toubro, there's also a big move now happening in BHEL, and that normally happens if Larsen and Toubro makes this kind of move, and BHEL being PSU company and today being that kind of focus on budget, so you're seeing a big move on BHEL as well. If you see the move right now,
lately it has been poor man's L&T, so to speak. So it moves whenever L&T moves. Take your point on that. Okay, but farm focus. We already heard, we got the big headline before the budget from the Minister of State for Civil Aviation, Jayant Sinha, that this will be a political budget, and it doesn't take too much to interpret that as probably at least 50% farm focused. Someone who understands the rural hinterland better is Sunil Duggal, the CEO of Dabur, and he joins us now. Good morning, Mr. Duggal. First of all, actually going from your numbers yesterday, which were very good, how is the rural economy? Is it a recovering economy? After all, not just you, quite a few of the FMCG companies have shown very decent volume growth.
Yes, there is improvement. We've certainly doing better than what we did a year ago on that demonetization quarter. But if you take another reference point, which is the growth over the sequential growth over the last 3 quarters, there actually has been a deceleration in terms of consumption. And that's something which is a cause of alarm, because actually consumption peaked in the first quarter, dipped in the second, dipped further in the third, as per the syndicated numbers which we have got for FMCG categories at least. May not be true for other categories. So we are now looking forward to some aggressive intervention by the government to revive rural growth, to revive growth in general, in particular rural growth, but growth in general. So at this point in time, it's nothing very exciting.
Okay, well, the street is quite excited. We're seeing all the rural-focused stocks rise, Mr. Duggal. If you can drill it down to specifics, what would you want the budget to do to improve the rural economy?
Well, I think there has to be a stimulus given to the rural economy, particularly the agrarian sector and the more impoverished agrarian sector, which is under a fair amount of distress on account of low realization in terms of agri-produce. So I think the MSPs is one, but MSPs doesn't cover the entire spectrum of agri output. So there could be higher Narega outflows. I don't think any single stimulus can work. It has to be a stimulus of a multiple variety which will prime up consumption in the rural economy. And I do believe that the government is seized of this and will make it happen.
Well, now, if you wear your hat as a representative of India Inc., not just rural India FMCG company, what are you expecting as a corporate on the taxation front?
I am not expecting any tax cuts. I don't think the government has the fiscal headroom to lower the taxes on the corporate sector. I only hope there's no increase in the form of surcharges, etc., etc. But so we'd be happy, quite frankly, with the status quo, and I don't think there is a real possibility of any kind of decrease.
Okay, so expectations are low. Mr. Dugal, thanks for stopping by. We need to take a short commercial break. We are picking up in the market, actually, up almost 0.5% now. How do emerging market experts approach the budget? Adrian Mowat will join in just moments from now. Do stay tuned in.
It's just about 1 hour to the budget, exactly 60 minutes. And you must say that the market is on its front foot, as it were, except for the mid-caps where things are a bit flat, but even then, the advance declines is 2 stocks advancing for 1 stock declining. You can't complain for the pre-budget overs. The market is clearly tackling the bull, tackling the bat with a front foot bat, as it were. Okay, the countdown has started, and I think we're getting pictures of the finance minister reaching Parliament with his team and that very important briefcase as well. All eyes of the nation are going to be on what's inside that bag.
I don't think I can see him.
You can't see much except camera.
He's getting mobbed by all the photographers at the moment. But yes, in 1 hour from now, we'll get to know what's inside that bag. Those are live visuals coming in for the countdown to the budget.
All right, well, Sudarshan is back with us. Sudarshan, we missed you earlier, couldn't connect. What's the trade now? I mean, there are so many stocks, rural-based stocks like Escorts and M&M flying. There's L&T flying after the numbers. What trades now?
Well, the first trade, of course, is to be long in the Nifty using Nifty call options. So buy, I mean, I'm assuming you've already bought the traders, buy 11,000 calls.
Okay.
Apart from that, Escorts, L&T are 2 trades we've already discussed. But Apollo Hospitals and Bata India are 2 side trades that are worth looking at today.
Okay. All right, Sudarshan, thanks for that. We'll come back to you for more technical calls. But for now, the market has actually picked up to the high point. The Sensex is up 200 points. So going into the budget, quite strong, I must say. The mid-cap index has also arrested its losses. Adrian Mowat, emerging equity market strategist, joins us now to give us his view on what to expect this time around. Adrian, hi, good morning, and always good speaking with you. We're talking after a while. You know, the Indian markets have underperformed their emerging market peers this year. Is it the overhang of the possibility of the LTCG that's keeping our markets from outperformance? And if that does not come through, how do you see the Indian markets perform?
Yeah, look, I think there's a couple of dynamics here. There's clearly quite a powerful story in China, particularly them focusing on higher return on assets, you know, partly in order to service the debt levels that they've built up. Tech's been doing well, but that's been tech as in internet and to some extent tech hardware rather than tech software. We've also had reasonably good political news out of Brazil, more optimistic data out of Mexico, and in South Africa, the ANC leadership election went in the right direction. So I think there's been catalysts for other markets, and India's perhaps been more steady as you go. I think the broader index is up about 3% this year, so underperforming EM. And it's also notable that small caps are down as well.
Morning, Adrian. As always, pleasure speaking with you, and good to have you back after a bit of a gap. Well, you know, you've seen so many budgets and how markets react to them. If you're an India stock picker, would you just let it blow by? Or do you think it actually makes a material difference to your stock picking?
Yes, I think the significance of budgets has declined over the years, which is probably one of the benefits that you have of the, allowing the private sector in India really to take over the growth momentum. We've had some very major changes, particularly GST, and obviously GST, the revenue from that has been disappointing. We've had demonetizations. We've had some big macro events that have been important. I think the idiosyncratic issues of the budget are small. The expectations are for perhaps some populist measures. You know, we've got a deadline for an election early 2019, and maybe there's a temptation for a little bit of a giveaway and maybe give the government a flexibility to call the election earlier. But that does seem to be discounted in the stocks and the research reports that you're seeing. I think it's maybe, you know, does this tell us a little bit about the political timing as opposed to give us a really strong guidance about which sectors to be overweight or underweight?
Okay, well, actually, yeah, we did have the Minister of State for Civil Aviation, Jayant Sinha, formerly a Minister of State for Finance, telling us this is going to be a political budget. But Adrian, the other issue would really be deficit. The bond markets in India have been sulking big time with, not even a mention of the deficit yet. Do you think the finance minister should worry a great deal? 3% should have been the long-term range that he should come to. Should he stick to it?
Yes, so the market's going to look at two important cyclical factors here. So there's the RBI revenue, which undershot because of demonetization. Plus there's indirect taxes, the GST disappointing. So if you've got a normalization in those revenue sources, I think the market would then become a bit more relaxed. If you don't get a normalization in those revenue sources, then the market is going to be anxious. I also think there's a global context here for bond markets. Remember that US bond yields are drifting higher. There is an expectation of some 3 moves at the short end by the Fed, and US long rates being somewhere near 2.75 by the end of the year. So Indian bonds will partly reflect that. But there is a specific issue, as you highlight, which is that the budget deficit to GDP has exceeded the target. There's some speculation of a reversal of the Fiscal Responsibility Act in India, and I think that would be a negative fundamental for the Indian bond markets.
Okay, for now, the equity market doesn't seem to have any jitters as we head into the big budget. I mean, the Sensex is still up almost about 200 points, and a lot of rural-focused stocks are doing well. The two-wheeler space is doing exceptionally well this morning. Bajaj Auto, Eicher Motors, Asian Paints from the discretionaries are up almost about 1%. So looking pretty good.
But not the bond market, Sonia. It's bond market is showing a little bit of jitters. I mean, 7.43 from 7.42 yesterday. So this word political budget may not have gone down well with them.
Okay, well, we'll wait by and see. We don't have to wait too long.
Yeah.
But Adrian, just one final word before we let you go. If indeed there is an LTCG imposed, maybe to the tune of about 10% or so, is that something that the market will digest, or do you think that there would be, a slightly higher damage than what we've seen earlier?
I think that sort of sits with the sort of previous, comments. I think that there's a risk that this budget sort of generates a greater political timing concern with a fiscal deficit concern, and that could be a relative drag on the Indian market versus other emerging markets.
Okay. Well, just a final question. If you've been looking at the earnings lately and the performance of corporate India in general, what would you pick in India?
Yeah, so I think we've got a story out of the Indian market where earnings have been relatively weak. There's an expectation that for the current quarter we're in that they're going to be better because you get the sort of rebound from demonetization. But there's a degree of cynicism out there that it's a base effect. So that tends to make you go back to what you like longer term. So where are you seeing meaningful increase in sort of penetration? And so the financial sector still looks pretty good from those dynamics, as does some of the consumer stocks. And maybe it's a little bit more rural consumption than urban consumption, which has been a theme for a number of years now.
Okay, Adrian, as always, a pleasure speaking with you. Thank you for joining us. That's the word coming in from Adrian Moat. He says that other emerging markets like Mexico, Brazil, etc. also have a lot more positives going. So it's not just an India story.